Hello, everyone. Thank you for tuning in. Some interesting stuff going on in the market. Now, those of you who listen to me know that we talk about opportunities. Some of the greatest traders of all time, they say, "Oh, I make my money by being on the sidelines." For instance, wow, you guys hear those birds in my backyard? I love sitting in my backyard on the deck and watching them. They talk like the different species have the same chirps and they go back and forth. And then sometimes these hawks fly in and all the other birds gang up on them and like chase them out. It's really amazing to watch. But yeah, just like birds, people feel psychology. So I don't. That's one of our lessons. But anyway, let's just get into what's going on in the market. So uh yeah, things are starting to look pretty weak. We've been talking about this for a while. I know some of you have been doing well. So we had the inflation report this morning, which was higher than estimated. I would be shocked if the inflation report that we get tomorrow is not higher than estimated. And I just want to point a couple things out here that we've been looking at. All right. First of all, within 3 months, oil is up 25%. All right. That's a lot. I mean, think about that. Oil is like the most important commodity, 25% in 3 months. If we go look at copper, which is also another good indicator of inflation, it's broken out. It's broken this resistance from back here. There tends to be resistance at resistance levels that were before because there's people that bought copper back here that as soon as it goes underwater, they're like, if I can get out at break even, I'm going to. So when it finally gets back to their price level, you get these remorseful buyers placing sell orders and it creates resistance. But anyway, this buyers have overpowered them, moving higher here. Oh, actually, let's see what natural gas is doing. And then we'll take a quick look at the what's going on in the equities because it's pretty more. All right, natural gas. Natural gas is with when our community here is. I'm sure you guys all know natural gas gave us some really good opportunities a year or two ago, but I don't know for some reason I don't see the levels as well as I used to. So I'm kind of on the sidelines over here. Now let's take a look at the S&P. This is usually where we start, but I think because of the way the market's now, made sense to look at commodities first. All right, so here we go. So the S&P is, in my opinion, rolling over. This is the beginning of a big correction. And you know what? I'm not saying run for the hills. I'm not saying go buy bottled water and vitamins and stock up on weapons. It's like markets go down too. They don't go up forever, And anyone who's listening to me who's been in the market for more than 10 years knows that. The good thing is there are ways to profit from it. And I think it's easier to profit from markets that go lower than markets that are going higher because markets go down faster than they go up usually because people sell based on fear, and fear is a powerful emotion. Markets go up on hope. Markets kind of meander up. So we got some short-term support here. We're testing it on the S&P. And here's what we really got to watch. And this is what we've been focusing on. All right. So tech for a few weeks there was kind of not the definitive factor. We're going to look at these sectors. All right. Actually, you know what? Before I show you that, I'm going to just show you this. When we look at the S&P, we're looking at this the Spider ETF. And here are the holdings. All right. And different sectors are in the driver's seat at different times. Most of the time is tech, but sometimes it's financial, sometimes it's healthcare, sometimes it's these other guys. Real estate, materials, utilities, they're all so small. It doesn't really matter in the broader markets, but we do watch them. I mean, materials and have been doing really well because of this whole commodities boom that's been going on. Energy is a small sector too, but because energy is so important, sometimes this can influence the rest of the market. Sometimes consumer staples start to move higher before the broader markets move lower because you get this kind of flight to safety. But anyway, let's take a real quick look now and see what is in the driver's seat. Well, tech, I mean, this looks weak to me. Testing support, and we're in this downtrend. All right. So support is this like large group of buyers. When you're a trader and you're trading big size and you're in the institutional world like I used to be for a long time, this thing averages 6 million shares a day. All right. So say you got a big order, 1 million shares to sell. That's a big order. It's not tremendous. It's not like, you got to sell 50 million, but you're going to need some savvy. But if you come into the market, there's not going to be enough buyers around here to absorb all your supply. You're going to have to willing to be offer out at a discount. And when we get to support, it's different. There's enough buyers around, you can sell all you want. And then sometimes we rally off of the support because the buyers start to think, oh, I see this other guy, he's buying. I see that other person, they're buying, blah, blah, blah. And they don't want to miss out. So they start to jump ahead of each other. But when the support breaks, meaning the price trades below it, it tells us that those traders and investors who wanted to buy are out of the market. And when buyers or demand leaves the market, the sellers need to push the price lower. So the tech sector is right in the driver's seat right here. And I'm going to bring up Apple because we've been watching this. I mean, we've been waiting for this thing to break down for like a month. But hey, you know what? We haven't done anything yet because it hasn't started, but now it's starting to. Here's an example where we get supportive former support. This chart teaches a great lesson. Notice how what was resistance up here becomes support over here. And notice how what was resistance here becomes support over here. Well, this is psychology. And in markets, some price levels are more important than others. And that's just how it is. So there are people who sold here and they thought it was great when the price went lower. But when it finally went higher, a lot of them were like, oh, I made a mistake. If it gets back to my price, I'm going to buy my shares back. People sold here, gets back to the level, right? Support forming at former resistance levels is a common thing. It's a common principle of markets, and it happens in any market because whether it's Apple or Bitcoin or a commodity or a bond or whatever, human beings that trade experience the same emotions. The other interesting thing is that you can look at these same patterns on charts of different time frames, and that's because it's a human emotion. And regardless of whether you're a day trader, a swing trader, a long-term trader, a buy and hold investor, you experience the same emotions. And that's what we see on charts. Like right here, descending triangle, descending triangle. What does this mean? Is this some bizarro thing? No. A descending triangle shows like, hey, the buyers are patient. Markets go in peaks and valleys. The valleys formed at the same prices. That just shows you the buyers are like, yeah, whatever, dude. The peaks formed at lower levels. This shows you that as time is going by, the sellers are more aggressive. They're willing to come into the market and sell lower prices. So complacent buyers, aggressive sellers, sets the stage for move lower. Could be the same thing right here. Complacent buyers, aggressive sellers, could set the stage for a move lower. All right, now before I go, and please make sure you check in tomorrow. We do our 8 o'clock morning call. And we do have a lot of institutional and professionals, but for you, we do have a lot of retail and newer. Oh, wow. Look at that. Man. Whew. This is bearish for the markets. Now, we just saw the descending triangle pattern, right? Same thing here. So what could be more different than a 20-year bond ETF than Apple? Well, a lot. But what isn't different is that the people that are trading feel the same emotions. This is the descending triangle. Buyers are willing to hang out. Sellers are getting more aggressive. Whatever market you're in, complacent buyers, aggressive sellers. The sellers are just going to start overrolling the buyers because they're going to just start freaking out. Now, the reason why this is important here is because this means interest rates are going higher. So this is going to be bearish for the broader markets. So just before I go, a couple of things to focus on here. You can just buy ETFs that go up if the market goes down. So first of all, I'm going to turn my light on here. Pro shares short SH. This is designed to trade inversely to the S&P 500. So S&P 500 goes down 2%. This should go up by 2%. What a lot of my students are looking at is this, because we've been waiting for this big sell-off to come in the semiconductors and the AI stocks for a while. And I know some people are already doing very well, but I think it's a good idea to maybe buy some long-term out-of-the-money calls on this. I don't know what's going to happen, and I don't know enough to know about what the hell is going to happen with AI, and it does this and it does that, blah, blah, blah. But I've been in the markets a long time, And I have seen things reverse, well, go way farther in one direction than people think they ever will, and reverse way more. So there's going to be a big reversal in these AI stocks. And I'm not talking about, where AI is going to be in like 10 years, right? Blah, blah, blah. I know, I get it. I get the hate emails. Well, not hate emails, but I would say constructive criticism. But this is the inverse ETF. It goes 3 times in the opposite direction of the Direxon semiconductor index. So if excuse me, so if Nvidia, AMD, they all start heading lower, this thing is going to skyrocket. So is it going to happen tomorrow? I don't know. Is it going to happen on Memorial Day? Is it going to happen by July? I have no idea. But my guess is I would feel very comfortable, and I think I'm actually going to do it, is to just kind of buy some. I'm going to look around, look for some out of the money calls that may be kind of cheap out in maybe June or July. And yeah, that's it. All right. Thanks, everyone. So please check back in tomorrow, and I'll see you all then.